Those familiar with London and Toronto listed oil producer Canadian Overseas Petroleum, or COPL, probably know they have producing oil assets in Wyoming and have recently bought further P1 and P2 reserves from their bankrupt partner Cuda at advantageous terms. Joining us live from London, I was thinking it might be Calgary or somewhere exotic, but Arthur's joining us live from London to talk us through the assets and their potential. Here we are, President and CEO Arthur Millholland.
Well, good evening. Start again. Thank you very much for having me, Don.
And it's an absolute pleasure. It's been a while, and what a transformation you made a COPL. Well done.
Well, thank you very much, and we got a lot more to come. So
good answer.
So just strap yourselves in.
Okay, audience, are you strapped in?
Anyhow, I think we got quite a number of our shareholders online here this evening.
You certainly have.
So for those who haven't really seen it, this is a photograph of our plant facility at the Barons Flat Shannon unit in the Powder River Basin of Wyoming. And those actually aren't trees in the background; they're windmills, and there aren't many trees here, so it's basically what it looks like. I think first off here is that, you know, this year we thought in 2021 was a transformative year. This one really was even more so for us. And so the map on the right shows our acreage position in the Powder River Basin, mostly in Converse County, and we have 3 units. We have 85% of the Barons Flat Shannon unit, which are working interest, and we're the operator, which is an early stage miscible flood. And the Coal Creek unit, we have 100% of Coal Creek, and there's an exploration unit called the Barons Flat Federal Deep unit. We have 85% of that. We're the operator, and as well as a number of non-unit lands in between that we have 100% of. Right now we have a 40+ year reserve life, and the oil production is inclining rather than declining. And this miscible flood primarily coming from it, a little bit of oil coming from Coal Creek right now. And the facilities were all built and commissioned in late 2019, and really the gas injection got going in February of 2020. And our current production, we're working on wells and optimized, but right now it's around about 1,600 barrels a day, as we announced in August. Some weeks it's higher, some weeks it's a little lower. We've got 40.5 million barrels of 2P reserves before royalties and 31.3 after royalties. And of course, we're listed in Canada on the Canadian Stock Exchange as well, here as a standard listing on the main board of the LSE. Those of us who follow us know what we did in 2021, but we just put it in here for people that don't know who we are. But we got all this done in 2021, bought this field when nobody could go out and borrow money in the oil business, and we did in March of 2021, and here we go. But what we stated earlier in the year were our objectives for this year, and that was to complete the consolidation of the interest in Wyoming. We did that. We had a bankrupt partner. We purchased their assets out of bankruptcy in the United States, and that closed in July. Our next objective is to refinance our U.S. Affiliates credit facility, and primarily to reduce our cost of capital, get a better lender, optimize and increase our oil production at the Shannon unit, and we're doing that here right now. Commence the phase 1 delineation of our deep oil discovery we made last year, and of course, you know, to continue to maintain our current ESG operating credentials, which they're quite envious, because we get most of our everything's electrically powered. We get it from a wind farm, and we really don't flare a lot of gas. Normally we don't flow any. Last but not least is to restructure our hedging program. The consolidation of the assets at the end of 2021, our 2P net present value at a 10% discount rate was $258 million. Post the acquisition of Cuda at the end of July, we had an updated reserve report done, and that's increased to 492 million. We purchased Cuda's assets for $19.15 million, and we financed that with a $25 million face value convertible bond, which the majority of which is actually held by a large institutional shareholder here in London, who was our largest shareholder then, still is, and we would call them our cornerstone investor. They're very much happy behind us and continue to support us. The next page is here. If I'm quoting reserve numbers under our regulations in Canada, I've got to put a page in from Ryder Scott, and so there's what they were on December the 31st at the end of last year, and here's what they are here at the end of July. For all of those, I would ask that the definitions of the reserves are in this report in the back. In Canada, we're subject to Canadian regulations. They're much different than they are here or in other jurisdictions. For example, proved reserves in Canada there's a 90% probability that the recovered volumes will exceed the amount, which is much different than a P90 case here where it's up to the amount. And that's because of scandals in the past in Canada 25 years ago, and the rules are pretty stringent. What we're working on here right now is refinancing of our credit facility. Now, in March of 2021, we borrowed $45 million from a credit fund, a large U.S. credit fund in Boston, to finance the acquisition of Atomic Oil and Gas, which was the operator of all of this. And most importantly, there are no guarantees on this money with our parent company, which is the public company, nor are there any warrants or anything else from the public company. Anything to do with, there is a warrant on the subsidiary company, but it's a cash payment, over time. It's based upon the increase in value. We've approached a number of U.S. banks to refinance this. We have strong interest right now from at least three, and two, all of those three that are well known to us and ready to deal with us. Now, this can take either in the form of a straight reserve-based lending facility or a senior loan, depending on how it's structured. But the key thing we'll call it, both would be senior. A senior facility would be to retire the current $42 million that we owe the credit fund. We did pay them $3 million at the end of July, and potentially also restructure our hedges, which are swaps. Now we'll talk about those later, but we have purchase swaps on butane and sales on crude oil. And right now, the net cost to buy those out would be about $10 million. We're also looking for a junior facility which is like a revolving facility to provide us more operating flexibility, and as well as looking for CapEx, to convert our proven undeveloped reserves to proven developed producing. And we have a substantial amount of proven undeveloped reserves. The key thing in doing all this is the reserve report. Ryder Scott is one of the top two of the independent evaluations engineers globally. The other one is DeGrollier McNaughton in the U.S. They've evaluated 100% of the reserves of our company. We have an updated report as the effective date at the end of July, which we received in September. We also have resources other than reserves, which Ryder Scott has done, both in contingent resources and prospective resources, covering a deep discovery that we made here in last year. But one of the things that a lot of our shareholders forget is the sunk cost to date of the businesses that we purchased. So to build this miscible flood, for example, there was a total of $141.6 million gross invested to date, of which the net interest that we have represents 120.4 million. And that's a combination of drilling, 68.6 million for drilling, and the production injection wells, 26.7 million for the facilities, $46.2 million for the miscible injectant. Now, before we closed the transaction to buy Atomic, they put in 1.1 billion cubic feet of gas into the reservoir, enriched gas. We've put in to date 3.2 billion cubic feet from April 2021 to present. And when I say we, because we were carrying Cuda, through the whole thing. Now that's an asset. It's not reflected in our reserves. It's not considered to be reserves, but it's in the reservoir. And if we look at the heating value of that, it's about double the heating value of pure methane. And so at current prices, it's worth about $78 million today. It was injected at much lower gas prices. We're also go to a bank and say, well, most look at us as a single asset company. If we look at things, we're actually a 3-asset company, and we'll talk about Coal Creek here in a moment. We've got the Barons Flat Shannon miscible unit, the Coal Creek unit, and our deep unit. The Shannon unit is a miscible flood. It started really the production at the Shannon unit on primary. The first well went on in 2016, but the vast majority of them came on in 2017, 18, and essentially it went right to enhanced recovery right from the start. And it's one of the few in the world that did that. Usually they would water flood it in between. Our 2.22 million, we have 22 million barrels of proved reserves split almost right down the middle between proved, developed, producing, and proven undeveloped. The majority of our proved developed reserves are at the Shannon unit. The rest of them but the PUD reserves are split equally between the two. And primarily either it's the Shannon unit or Coal Creek, the risk is actually mechanical, rather than a reservoir. In other words, a mechanical risk to drill a horizontal well to develop it. We also have 18 million barrels of probable reserves. Those that are there at the Shannon unit are recovery factor related to the miscible flood, and in the Coal Creek unit, it's actually lands offsetting the proven reserves. We also have significant contingent resources offsetting the 2P reserves at Coal Creek, and that's an awful lot of upside. And that's not even talking about the prospective resources we have on the deeper discovery. Now, the key thing is in talking to a bank is what I have here on the screen is actually right from Ryder Scott. It's at the end of last year. It's the same forecast production curve that we've had previously, and the issue is primarily to start with the Shannon field is how do we get it to see the real ramp up. And there's total proved, which is a solid line. The current proved producing, total proved, which is little squares, and the proved plus probable. So what we're working on here right now is to debottleneck the Shannon field. And that's primarily we're facing here right now is that the gathering system to gather the gas, because all the produced gas we produce from the wells is gathered and sent to the plant and compressed for reinjection for the miscible flood. And it's coming back in certain wells at much higher pressure than was originally simulated. And so it's under design. And so we have a simple design for that. We're seeing high pressure trends in the reservoir. It's just to build a high pressure system to gather the gas and take it back to the plant and leave the existing system as a low pressure system. And we can do that for relatively very cost effectively for about $2.5 to $3 million. We'll have to add some additional compression at the gas plant and build some more injection lines to convert some injection wells on the western side of the field. We have 9 additional wells to drill in the PUD area to increase the production, and also 1 or 2 injection wells, and a whole bunch of PUD wells to drill in the Frontier 2 at Coal Creek. So this is just a schematic of my sketch of where these pipelines are. They're actually going to follow existing right-of-ways. We have an application right now, to flare some gas to ease it, but we can get this done fairly quickly once the permits are in hand. And that will take the load off us. We have between 300 and 800 barrels a day of production restricted from certain wells because we just can't access the facility with it, and we're not actually allowed to flare large volumes of gas. We can flare a little bit, which we have temporary permits to do that. We're looking for an expanded permit until the pipeline is built, but that will help us go a long way. This just illustrating where the PUDs are in the Shannon unit or on the fringes of the field, but the core area of the field is in the center, is what's being produced here right now. But the key thing people don't really look at us is what we have here at Coal Creek. And our discovery well that we drilled here late last year in August, September. Don't see in my cursor, it was right down in the corner here. And so, but there's a producing field at Coal Creek in the Frontier 2. This is the Frontier 2. So the green lands are proven reserves at Coal Creek and proven undeveloped. The yellow lands are probable reserves, and of course there's various C1, C2, and C3 contingent resources, which are orange, pink, and blue. So this is a significant resource, and if you look at the curve in the forecast production curve, what it says of the total proved plus probable case is the Shannon field with the recovery factor plus all the drilling on the yellow and green lands here at Coal Creek. It doesn't account for anything else, and it's just south of 10,000 barrels a day, just a little bit less than that. In addition to the Frontier 2, there's also proven undeveloped locations in green in the underlying Dakota, which we're producing from here right now, as well as probable reserves in yellow plus contingent resources. But one of the big things we've been working on, and that seems to be the topic of discussion on your boards, is what are we doing to optimize the production in the Shannon field? Well, I've talked about our pipeline issue, and we've talked about that in press releases and our disclosure. It is restricted. We're flaring right now just under 1 million cubic feet of gas under temporary permits from several wells. We're trying to balance the field, and don't forget, any gas that we flare, we've paid for, because primarily it's injected. That's coming back through the wells. It's not solution gas. It's butane-rich methane. But we made an application to flare up to 3.5 million cubic feet per day, and that comes in front of a hearing in Casper, Wyoming on the 11th, and we expect to get it. Now, it's not to say that we're just going to go flare 3.5 million cubic feet per day, but one of the things that we want to do in the final design of this pipeline that we're making, is to turn these wells right up and actually see what they'll do rather than calculate it. Now, this flaring, we think, will unlock about 300 to 600 barrels a day of production currently. So that will take us to around 2,000 barrels a day to 2,600, or 1,900 to 2,500, and those are in line with the curve that we see from Ryder Scott of where we should be. We've also tied in some wells directly into the gas plant. One And we did this past summer, and we've got permits in hand from the surface rights holder to do 2 more. And again, that will debottleneck our gas gathering system, and they're short tie-ins, like they're not very far. But the other thing is we're seeing is a real increase in the production from, in certain wells, to the movement of the miscible bank. And when I say that is that we had expected under the simulations that when 3.2 billion cubic feet of gas was injected, which would have been about late last year, that this bank would have started to move, and it actually didn't. And we've put a third more gas in it since then, and now it's starting to move. So we see low producing wells literally flip over to high producing wells. We've got 5 flowing wells in the field right now, and 27 pumping wells, and the pumping wells start to flow through the pump, and then eventually we have to take all that out and convert them into pure flowing wells. The other thing that we've noticed here is this oil is paraffinic. It's got a little paraffin in it, as all oils do in this basin in Wyoming. And normally this paraffin would come out at between 1,500 feet below the surface and 4,000 feet. But we found it right down to the perforations at 7,000 feet, and it shouldn't do that. So we're doing some analysis in the lab, but we really believe that the miscible front is actually changing the chemistry of the paraffin, and that's fine. We know it's there. We can't explain it, but we're dealing with it. And so rather than use hot oiling, we use condensate, which is really Mother Nature's gasoline, and it's extremely easy to get rid of paraffin. Most people don't use it because it scares the daylights out of them to pump this stuff. But on the other hand, our produced crude out of the flowing wells is much more volatile than the paraffin is, because the butane is trained in it. I mean, not the paraffin, the condensate. And because of that, we use it for hot oiling, or used to, where we take some produced oil, heat it up, put it down to melt the wax, and they were happy to pump that. They're happy to pump this. So we tried 5 wells in early August as an experiment, and they all worked. So we've been methodically going through the field to treat every well in the field, and it takes some time, but we're also reliant on outside services. We were from pressure pumping to do that, so we went out and bought our own pump, and on a unit, it's mounted on a trailer, and we take it around. But it took us about a month to get it, the manuals, the safety manuals, as well as get it certified under pressure pumping under the U.S. Occupational Health and Safety. So it's actually out in the field and working, and it cuts our costs way back. Again,
okay, Arthur, I need to ask you to wrap up there, please. Thank you so much.
Alrighty. Well, I've got schematics of the pumping and flowing wells, of how we treat them. People can read them, and looking at how most importantly, how the production has jumped up in one of these wells, and that's typical of what we see. But last but not least is our deep discovery. And we've permitted a number of wells on it for drilling. But most importantly here, we put press releases out, and interestingly enough, we were approached by a large, listed oil company in the United States, inquiring whether or not we wanted a joint venture partner. And it was at a very high level approach, and they would be a very good partner for us to have. So we're still in discussions with them. This is an enviable piece of acreage that we have. It's 50,000 acres, just under. We have 100% of the vast majority of it. We operate it. And most importantly, they know what we found, I believe, from the way they're talking with us, because the vast majority of the information that we've used to map this, other than the well that we drilled, is in the public realm. So we'll see how that goes, but it's extremely encouraging. Given the size of this thing, we can't do it ourselves. It is too big. And what our intention is right away, go into a secondary recovery on patterns, and that's the way we can maximize the depletion of the reservoir. And we would do it in stages as we go all the way through. So let's all stay informed. We look to have a loan agreement with a bank, hopefully a term sheet for that in the near term, and hopefully on finding a partner here. I would like to do that this month as well. We've put back the drilling until January because of just rig availability. We still can't buy any casing, but they have casing, and away we go. Once we get our production in the field stabilized, and it's not stable right now, it's just bouncing around. We're working on wells. We'll update the market at that time. So sorry for the lengthy presentation, but I haven't given one like this for a while.
So sorry, Arthur. We've only got 5 minutes for left for questions, and we've got lots of questions. So let's try and answer things concisely, and we'll crack on.
Sure.
Sam Boole says, could you confirm who you're looking at doing a JV with in January? That's the JV that you were mentioning. Is it possible, or is it commercially sensitive, that one?
Commercially sensitive.
Thought it might be. Likewise for Sam, will you be doing any more placings?
Nothing planned.
Nothing planned, there you go. Clyde Gaster, how long will these permits take to get? Are they long lead items?
The permits on the wells are with the Bureau of Land Management, and we have a number of permits in hand. And so, the reality is the only thing that we need is 15,000 feet of 9 7/8 inch casing. How's that? And
you're still trying to get hold of the casing?
Yep.
Okay, that's very good. Greg Thompson, what's the current barrel BOPD? What's across all your fields? You've got 3 main assets. Across all those main assets, what's your current output?
As I said earlier, right now it's about 1,600 barrels a day, but tomorrow it could be 1,700. And as I say, when we work on these wells to do the condensate treatments, read the presentation. A pumping well takes about 5 to 7 days. A flowing well takes probably about the same, because we've got to basically shut it down and turn it back on. And so you don't really have a stable month, if you see that, or a stable week. And we've got some wells that have flipped on us, and we have a service rig on right now. So it's not like old declining production where you got a decline curve and you can tell next week where you're going to be. What we do know is that it's going up, and we've got a handle on all the issues that we've faced here for the last couple of months or 3 months.
Tying into that, Jim Anderson, who's a long-standing shareholder, he says he notices that the recent update on the Wyoming oil and gas website shows that oil production has increased by around 11% in August compared with July. Are you pleased with this performance, and do you expect production to increase incrementally through September, October, and beyond?
Yeah. Yes, I do. Yeah, we're pleased, and certain times during the month in August it was much higher than that.
Yeah. Fantastic, and it's on an upward curve. Fantastic.
Mm-hmm.
Second question from Jim: are we any closer to finalising the RBL deal, and can we expect it to be signed off this month?
We're in discussions with banks here right now, and anybody that's dealt with a bank says that you don't want to walk in too eager, but we've got an excellent asset base, and we're targeting to get a term sheet here this month so we can draw by the end of the year. And so
you mentioned 3 different banks. Are you narrowing that down to one and then getting them to
out of the 3, they're all 3 are very interested, but we have one bank that we deal with on a daily basis, really just with our cash. They've already done their KYC on us. They know who we are, and they lend to the oil business, and they would be our preferred bank. Yeah.
Okay, good answer. And yes, Paul Brown, another pre-atomic long-term holder. The winters are quite harsh in Wyoming. How do you think this will affect the drilling program and the development of the topside infrastructure?
No, it won't affect it at all. I come from Alberta, Canada. The winters there are maybe a little harsher. we've got a drilling rig that's fully winterized, and it's easy to operate in the wintertime. You just have to know how to do it. In fact, more wells are drilled in Alberta in the winter than they are done in the summer.
How interesting. So is it actually easier in the winter?
In some respects, yes, it is. Yeah.
How interesting. Who would have thought?
No,
Final question.
No mud, you have ice. Yeah.
Final question for you, Arthur. You'll be relieved to hear. When is the drilling rig likely to be on site, and when do you think we'll hit 2,000 barrels of oil per day?
We're targeting January to have the rig on site, and we believe we'll find casing by then. The market is starting to loosen up. It's all been caused by the war in Ukraine, believe it or not. Shortage of oil field tubulars globally, and the cost is more than double right now.
Lord.
So that's our target. As far as the production goes, I think I've explained where we are and when we expect it in the presentation.
You have indeed. You have indeed. Arthur Millholland, President and CEO of Canadian Overseas Petroleum Limited, better known to us as COPL. Thank you so much indeed for sparing your time. Thank you for that presentation. That was really fantastic. Thank you.
You're welcome, Don. I encourage everybody to read it because there's lots in there and it answers most of the question, the emails and the text that I get, and certainly things that people are.
Guys, don't bother Arthur. Read the presentation, please.
Exactly.
There you go. Was that okay?
Perfect.
Thank you so much, Arthur. We really appreciate your time. Thank you.
You're welcome. Yep. Bye-bye.